All right, everybody, we just opened the broadcast for the participants to jump in. So we're going to give everybody a few minutes. We're a couple minutes early, and we're just going to give everybody a few minutes to log in and get set up. Oh. All right, there's still a lot of people logging in, but I think we'll go ahead and get started for the sake of time. We want to try to keep you guys on time and get you full of knowledge and then get you on the rest of your day. So I'm going to hand it over to Charity. Oh, Charity, I can't hear you.
Good morning, everyone. Thank you for joining today. We appreciate you coming to the first session in our pandemic recovery series. We will be going over quite a bit of information in this series. And so what we want to do to start our session today is to talk with you about what we will be discussing just briefly in each of the sessions. That will give you a chance to decide which of the sessions you may feel are most helpful to you. Hopefully you'll find something in all of them, but you can look as we go along and we'll be able to just give you the highlights so that you'll be ready. All right, Amy, can we look at the slide that has the first and second session? Okay, great. So what you'll see is in session one today, we'll be talking about navigating the economic initiatives and incentives. Now, Amy will be going over this in more detail as well as the agenda, so we'll go over that in a few minutes. Now, with session two, we're going to be talking about promoting agency success with your emergency preparedness plans, your infection control, and your quality programs. Some of the things that we'll be talking about in that session are ensuring that you have an adequate emergency preparedness plan, making sure that you are looking into your infection control and prevention procedures and your processes. What are the agency regulations from a governmental standpoint? We'll be talking about that not only from an operations standpoint, but from a legal standpoint also, and how to ensure a quality QAPI program, especially with the impact of COVID-19. You know, we get lots of questions about these things. We know that, for example, the state surveyors are out doing infection control surveys. And so what we want to make sure of is that you know what are the things that they're looking for and what are the things that you need to be prepared for so that when it comes down to it, you'll be ready for the surveyors to walk in and you've established good habits for what to do now that we've been impacted by COVID and we may be seeing future issues with it even or something similar to it. So that's what we're going to do in sessions 1 and 2. And now Heidi's going to talk about sessions 3 and 4.
Yes, hello everyone. So in session 3, which is on July 16th, we're going to be talking about identifying operational efficiencies during the pandemic recovery. In that topic includes some things such as operational process improvement, telehealth, telecommunications and home care, billing impacts of COVID-19, we all know that as we've all been affected, and labor and employment aspects of operational efficiency. So this includes operational with some legal tied into that. where we talk about, things such as operational process improvement. We know we've seen things like how do the staff get their equipment? How do they contact patients? How do they get into facilities? How do we improve that process? We've all been affected by that. Session 4, which happens the following week on the 23rd, we are getting prepared for the next round. And that is something that Amy is going to discuss. She's going to be reviewing agency financial survival, cash and capital management, debt management, budgeting, and meeting filing requirements to ensure compliance, because we know everyone has questions about those deadlines and the filing requirements, and she's going to get in great depth about that. Now, Richard's going to tell you about session 5 and 6.
Thank you, Heidi. Hi, everyone. So for session 5, we're primarily going to focus on the legal aspects of the pandemic recovery. Clearly, you have a list of some of the primary topics that I'll be on that day. But as you probably already heard from Heidi and Charity, there are some crossover topics like labor employment and governmental agency regulation tracking, which ties into really the compliance aspects of your internal controls. But with the pandemic that obviously occurred and still continues to occur, it impacts your operations, the financial conditions of your company. So we'll be talking about a very broad range of legal issues, everything from legislative initiatives that may lead to some legal impacts later on. So as a few examples, beyond just the privacy and security and corporate governance that's listed slides, we'll get into some comments specifically on the force majeure clause in every agreement that you have with your vendors or with third parties. Chances are there's usually a force clause and how it impacts that. And really what that goes into is, if a party is unable to perform under the contract because of the pandemic, how does that really impact you as a provider? Beyond that, we'll fraud and abuse, and how fraud and abuse will impact providers because of funds that's been issued to home health care agencies. But beyond that, we'll talk about how the market is looking like, and really the corporate mergers and acquisitions and purchasing market, and how that impacts providers, and really in some internal governance issues that shareholders may be impacted because of distressed assets or cash flow issues. And I think we'll also discuss some of the notification obligations if you're if you're a preferred provider under an ACO, not so much of a member, but obviously what some reporting requirements are if you are associated with an ACO as a preferred provider. And obviously with any other ancillary topics that come up through just normal dialogue and discussion. So after session 5, we'll go into session 6 on August 6th, talking about the different aspects of how to set yourself up for financial success, using technology for operational advantage, functional area outsourcing and implementation of best accounting, which I think Amy will go over for that session. So now I'll turn it back to Charity, and she can talk to you about sessions 7 and 8.
Okay, thanks, Richard. So in session 7, which we'll be doing on August 13th, we're going to talk about something that I know is very important to a lot of people because it impacts not only patients and family members, but also staff. That's something that oftentimes people get so busy in the day-to-day operations, they don't necessarily think about the psychosocial impacts while rebuilding agency operations. Many agencies have been negatively impacted either because they couldn't see patients or referrals slowed down and things like that. And that may have impacted your ability to staff the way that you normally would. So some of the things we'll be talking about that day are helping the staff to thrive in the post-pandemic world, while also looking at what are the legal aspects of those staff changes that have resulted because of COVID-19. Because it's for one, it's about your employees, but even as an employer, you may have questions. We get questions all the time about how do I handle this situation when, something changes with my staffing, or I have an employee. I've had 2 conversations this week alone about, what happens when I have an employee who can't work because they've tested positive, and does that impact me even from a legal perspective? So we're going to talk about those types of things. And linking to that, we'll also talk about those relationships with external stakeholders during that rebuilding phase. We know that one of the reasons that agencies haven't been able to make visits is because of facilities in particular who they've had to protect their residents and their minds, and so they have restricted access. And so, you may see with the patients in those facilities that there are some psychosocial impacts, and along with that, it's affected the agency's ability to maintain and or grow their census. So we'll link all of that together in session 7, and then we'll wrap up the series with session 8 on August 20th. Now, it relates somewhat to session 7 because we'll be talking about other external opportunities for agency growth and expansion. Some of this will be looking at what are some of the opportunities that are out there to grow the agency, whether it's to get back to the level where you started pre-COVID, or if it's just to grow from where you're at right now. And also, as a part of that, looking at if you need to do any due diligence to be ready for that, either as a buyer or a seller, how do you make sure that you're doing that process appropriately so that, let's say you're trying to expand your agency and, this is a way for you to do that. Well, we want to make sure that you know the basics of what to look for when you're doing that process. There are some value-based opportunities that we'll talk about as well. And just in general, the home-based care transactional landscape post-COVID, because these are opportunities for agencies to level set and to say, you know what, we've been impacted, but let's look at how we can start to regrow, and maybe we have an opportunity that we didn't even know that we had before. So let's look at how we can do that. So that's a summary of the sessions that we'll be covering in the 8-week series, and we do hope that you will find that you'll want to attend as many of those as you can. I will tell you we are recording the sessions, and that we were not able to get it up by today, but we will have a web page for the series where we will be posting the handouts and the recordings, so that if you're unable to attend all of the session or you just have to miss it for some reason, those will be available to you. We do encourage you to attend live if at all possible, because that's where we have the opportunity to take questions and give answers and that sort of thing, and just to have that dialogue. So we hope that you will be registering as soon as you see the invitation for the upcoming sessions, and we'll look forward to seeing you on more of them. So I'm going to stop there and hand it off to Amy, because we have some really great content for session 1, some hot topics that I know are of great interest. So Amy, I'm going to go ahead and pass it off to you to start session 1, and then we will come back to Q&A at the end. So.
Thank you, Heidi, but I think we missed one critical step. We did not introduce ourselves. So how about let's take a minute and introduce ourselves. I'll go last. So Charity, go.
Okay, well, and I have to say, we've been working on this for about 6 weeks, and we're all so very excited about everything that we get to share with you. I think we all just got really excited, and we couldn't wait to get started. So yes, thank you. So my name is Charity Farnsworth, everyone. I'm the Senior Vice President of Consulting Services at Healthcare Consult Link, and I am a registered nurse by training. And so my role is to work with the consulting group that works with home health, hospice, and attendant services agencies. And so, you'll be hearing from me some during the session, and we'll also bring in some guest speakers related to HCL, but that's who I am. So when you hear my voice, you know which company I'm related to. So, all right, Heidi, I know you're a part of HCL. Why don't you go next, and then we'll let Richard introduce himself and circle back to Amy.
Oh, you're muted.
Heidi, you're on mute.
Sorry about that, guys. Anyway, I'm Heidi Wall, and I am the Director of Hospice Consulting for Healthcare Consult Link. I have numerous years of hospice experience, so I focus on hospice consulting mostly, and the regulatory part of that. And we are very excited, just like Charity said, about trying to share all this information that we've gained and that we've seen and that we've tried and, incorporated into policies and forms, and we're trying to share it all with you so that we can help the agency. So I'm so grateful for this opportunity. And I will pass it along to Richard.
Thanks, Heidi. Hi, everyone. My name is Richard Chang. I am an attorney at DLA Piper. My background is, by trade, I'm a healthcare regulatory attorney, which means that I look at governmental regulations and how it impacts healthcare providers as a whole. Specifically, my focus primarily has been on representing post-acute care providers, which includes home care agencies and hospices. I have a board certification in healthcare compliance, so I get a lot of calls regarding developing internal compliance programs and asking about whether or not we are complying with X, Y, and Z, both in the operational and corporate transaction context. I've had a long-standing relationship with Healthcare Consult Link. I'm sure some of you who are watching might have been part of their administrators trainings, and looking forward to presenting and working with everyone. Thanks.
All right, so that just leaves me. My name is Amy Knight. I am with Knight CPA Group. You might know me if you've been around for a while as Amy Taylor, and I still answer to that as well. So I have a CPA firm. We're located here in Austin, and we serve agencies around the country, and we only work with post-acute and long-term care. So we do home health, hospice, as well as nursing homes and assisted living facilities, and we're a full-service accounting firm. We do a lot of monthly accounting, but we also do all the cost reporting, which is really my baby, and then tax work. Please don't ask me tax questions because I am not allowed to even do my own tax return. I can answer some questions, and the rest I defer over to the rest of my staff. So I'll get going. There's a lot going on. And let me say this, I don't even think Charity and Heidi know this because I go back with Healthcare Consult Link to the beginning of my firm, which was 18 years ago. I, right out of college in '97, landed in home care up in Oklahoma, which is where I'm from. And it was going from cost reimbursed to IPS. It was exploding in Oklahoma. That's what I got exposed to at first. It was a lot of fraud and abuse. It was a lot of crazy accounting going on. So anyways, I go way back then, but about 5 years later, I moved to Austin, started my own firm. And when I did, I met Bonnie and Merrill, and Bonnie was that they're the previous owners of Healthcare Consult Link, and they were a huge referral source, and not only that, huge mentors in my journey to be where I am today. So I've always held them near and dear to my heart. So we've always had a close relationship. So anyways, moving on, because I have a lot to get through. So we're going to go over financial economic incentives. I almost cringe at using the word incentives, but I couldn't think of anything better. But it's the economic, that assistance was added, that was given out to deal with this pandemic. So we're going to go over, and these are going to be brief, but we're going to go over the PPP, the Payroll Protection Program. We're going to go over the HHS Provider Relief Fund, stimulus payment. People are calling it different things. I'm going to touch on the payroll tax deferral so you know that's available to you and what it means and how you can use it. We'll touch on the EIDL loans and what's the latest with that. And then just kind of a couple little rhetorical questions. You know, how have you been affected, and kind of have you found any new efficiencies in your current environment? That kind of will launch us into later sessions that are financially driven that I'll be presenting on later in the series. So I'm going to launch our first polling question just to get us kind of warmed up. I learned how to do this yesterday. So what programs did you or your agency receive funding from? And you can answer more than one of these. So if you received these, you know, just check that you did. There's the PPP loan, there's the Provider Relief Fund, there's the EIDL advance. That was that $10,000 early on, or it was $1,000 up to 10 employees, 1,000 per employee up to 10. And then the EIDL loan is a true SBA loan, 30-year note that you'll end up having to pay back. And then there's none of the above. Especially if you're a Medicaid provider, you may not have gotten an HHS Provider Relief Fund yet. So I'll give a few more seconds. How about 15 more seconds to go through that? All right, it looks like we've got about half have voted, and they're kind of coming in again. Couple more seconds, I'll close it out. All right, and I'll share the results with you. So 80% of you marked that you did get a PPP loan, and I just cannot say Paycheck Protection Program, because I've been living and breathing and sleeping PPP since March 24th. And then 44% got the HHS Provider Relief Fund or the HHS stimulus payment, 25% got an EIDL advance, 18% an EIDL loan, and 13% got none of the above. So thank you for answering that. Just kind of wanted to get a feel on kind of what everybody participated in. And so let's jump into this. I do want to say, I'm sorry, a couple quick housekeeping notes. Please, we did reserve time for one-on-one question and answer session at the end, but to facilitate that, I really need you to put the questions in the Q&A panel. So there's a little box that says question and answer. Just click on that. You can put your questions in there and we'll answer out of that. I won't be able to answer questions out of chat. They already said we will have a follow-up email. We'll have, recording, a link to the recording as well as a link to the slides. And then we'll have a web page that also houses those as well. And so we will get all this handed out to you. So this PPP loan program, again, I am brushing over this. We are not going into detail. If you need detail, I have done multiple detailed, in-depth, 90-minute webinars on this. I did one as recent as yesterday, and they're all on my YouTube channel. They're all recorded. You can go watch those. So in brief, not everybody, most people are familiar with this program. The intent was to give businesses 2.5 months worth of payroll, and they were given 2 months to spend it. And when they went time to spend it, it was eligible to be spent on payroll, but also rent, utilities, and interest. But there were some rules that went into that. And if you followed the rules, then you could have forgiveness of this loan because it starts as a loan. It is a loan on your books. You sign a loan document. Many people don't understand this. You sign a promissory note. But then once you're finished spending your money, if you followed the rules and you don't have any reductions, you can apply to have it forgiven. And there's a chance you can have some of it forgiven, but not all of it. And so we're going to walk through that at a high level. So what's eligible for forgiveness? You are allowed to spend this money on payroll costs, which includes any and all kinds of salaries, wages, and payments to employees. I say any and all, any kind of wages. If it was a wage, a salary, hourly wage, bonuses included, but it's not going to include things like mileage. Contract labor does not include that. It's not a W-2 wage. You could also include the employer's portion of the health insurance and the employer's portion of the retirement. So they all called that payroll cost. Then on non-payroll cost, you could include interest that was for mortgages or any real or personal property loans. You could include a rent or lease that was for real or personal property. What that means is your office building, your storage rent, your equipment rent, copier, your auto lease, if it was in the business's name, all of those lease payments qualify. And then utilities such as gas, electric, water, trash, sewer, telephone, internet. That all came together. Those were your eligible expenses for your PPP loan. Now, what's not eligible? You were limited, first of all, no employee that has a principal place of residence outside the US. So if you've got any IT people, any marketing people, maybe you use somebody out of Canada like I have in the past, those people would not qualify. But bigger than that was the compensation limit. You were capped at $100,000 of annualized compensation per employee. So that was key that you had to keep in mind. And it doesn't mean that during the window of time you had to spend the money, you could pay somebody $100,000. Annualized means over the period. So you have to take $100,000, divide it by 52 weeks, times however many weeks you used your spending on, okay? So that's the annualization works. So I think 100,000 annualized is like $19.23 a week. And so if it took you 10 weeks to spend, then you could have allowed $19,230 for one employee. So it depends on how long it took you to spend the money. You also could not include any qualified sick and family leave. That was then you got a reimbursement under the Family First Coronavirus Response Act. And then also, this sounds silly that I added this, but any expense not listed above, the answer is no. So for instance, software lease is a no, because we keep getting asked all the time, well, can I include this? No. The PPP loan expenses are very, very well defined. And so there's really no fudging on it. On June 4th, the government came in, and I swear that's been almost a month, and it feels like 4 days ago for me. Everything has moved so fast, and then time stands still. It's kind of crazy. So on June 4th, there was a new update. So another act was passed. But luckily for us, this act was very, very focused and targeted. And so it was the Paycheck Protection Flexibility Act. A lot of people just called it the PPP fix. So what they did was they came in and they extended the period in which you had to spend your money from 8 weeks to 24 weeks. And if you already had a loan, there's not really an election that you make from the banks we've talked with. They're just saying, we're going to assume you want 24 weeks unless you come and apply for forgiveness at 8 weeks, which you can't even really do just yet. So just spend it out. When you're done spending, if you elect 24 weeks, you do not have to wait all 24 weeks. If it takes you 8 weeks to spend, 10 weeks to spend, 12 weeks to spend, when you're done spending, then you can start the next step, which would be applying for forgiveness. It also added more exceptions and safe harbors to the forgiveness reduction rules that were very, very favorable, specifically to our industry. Really, they're just favorable to all small businesses affected. It reduced the direct payroll spend requirement from 75% to 60%. This wasn't a big impact for our industry because we are very labor intensive. And so it wasn't hard for you guys to say, okay, I got a $100,000 loan. I'm going to spend $75,000 on payroll. But that's now been back down to 60%. It does impact a lot of small businesses, and it really helped them a lot. But what we're seeing, home care hospice, is they're basically saying, I'll just spend the whole thing on payroll. That way nobody's scrutinizing my lease expense, my telephone bills, and things like that. So that rule didn't really affect us too much. Anywhere in the act where it originally read the date of 6/30, it got changed to 12/31. And then I mentioned we're going to go over this payroll tax deferral. In the beginning, that was not available if you took PPP loan money, but they've removed that exclusion. So now, even if you got a PPP loan, you can also defer your payroll taxes. And then all new loans are now a 5-year note instead of a 2-year note. Now, the deal is, as if you have an existing loan, can I convert it to 5 years? You can if the bank will allow you to, and most banks will not allow that. The banks do not want this on their books. Another big piece of news that came out, and this came out back at the end of April, so the original CARES Act called for the PPP loan forgiveness to not be included as taxable income. So, our favorite people over at the IRS said, okay, that's cool. We will not include it on a 1099-C cancellation of debt and require you to include it as income. However, since it's tax-free income, we will not allow the expenses paid with those funds to be tax-deductible expenses. So that was a backdoor way for the IRS to come in and make it taxable. So the long and short of it is, at this point, it is taxable. Whatever you are forgiven will be taxable income. It'll increase your taxable income by that amount. That was not the congressional intent of the act. There are many that are very upset about this, and they're wanting to have it fixed, but we're not I haven't heard anything lately. I know it's still being discussed. The good thing is everybody's got a long time, relatively speaking, before you have to pay the tax on that, right? So next April, March, April is when you're going to be filing taxes for this year. And they've got until then to get it fixed. So again, I haven't heard anything lately, so we'll see, see what they do with it. So forgiveness, there is some rules about the forgiveness, and one of them seems super, super basic, but the maximum you can have forgiven is the loan amount plus accrued interest. And I giggle at it because in the beginning, some people took and ran with it. Well, especially, so remember back in the beginning, it was 8 weeks. And so they were like, if I spend all this money on eligible expenses in 8 weeks, I can have it forgiven more than what I was loaned, which doesn't make any sense. So it was weird how they came up with some of these theories that were floating around. You can only get forgiven up to the full amount of the loan plus the accrued interest. You can, the loan forgiveness is actually filed with the bank and not with the SBA. However, here's what's happening right now with the banks, and this is news that I got yesterday. There's one local Texas bank that we work with that did a lot of loans for us, small bank, because the big banks were not doing what they should be doing. And he said, well, we're not taking forgiveness applications yet because the SBA portal to file the application is not up yet. And I said, well, wait a minute, because I happen to know we don't file with the SBA. Well, what's happened is, remember, the banks had to use their own money to lend this out. So the bank approved you, the bank gave you their money. It's just SBA backed. It's SBA guaranteed. So the SBA has put zero money back into the bank coffers, okay? So now you apply for forgiveness to the bank. The bank reviews your application. They say, yes, we're going to give you forgiveness, but they then are going to submit that to the SBA. This is the portal that they're talking about. That portal's not ready yet. They're going to internally say, okay, we approve forgiveness on this. Again, I'm not a banker. I'm piecing together pieces of information that I have to make it make sense. So the bank is going to say internally, we're going to approve this loan 100%, put it through the SBA portal. Hey, SBA, we're forgiving a $100,000 loan. Please give us $100,000. And then they're going to go back and tell you, okay, your loan is forgiven. That's the flow that I see happening. Since the SBA is not taking that from the bank yet, the banks aren't, my bank, a couple of the banks we're working with are not accepting the applications. Now they may take them from you and let them just kind of stack up. I don't know that they will though, because the act says that they have 90 days to make a determination. So if you submit an application on July 1st, their 90-day clock starts ticking. What I also know is that the bankers lobby campaign, the lobbyists are in Capitol Hill right now, and they're trying to lobby for even more changes to the forgiveness application, which we'll get to in a minute, and also a blanket forgiveness or automatic approval to forgiveness for anything less than $150,000. So that is being worked on. Don't count on it, but it is being worked on. I think there's a pretty good chance that'll happen, but they're trying to get it through legislation. So I'm sorry, I kind of diverted off of my slides here. You are allowed to start, per the act, you can apply for forgiveness 56 days after it was loaned to you, but no later than 10 months after the end of your period. Now, if you don't file for forgiveness within 10 months, the SBA is, the bank, I really should say the bank is going to assume that you're not seeking forgiveness and you're going to have to start paying that loan back. If the SBA denies you, you can go to the, if the bank denies you, you can go to the SBA and appeal that denial. So here is the forgiveness calculation in a nutshell. I don't have a graphics person on staff with me, so I didn't have a pretty way of presenting this, so I just try to make it plain and simple. But you're going to start with your total eligible expenses. Then you're going to do a reduction due to the salaries and wage reduction, which we're going to get to next. Then you're going to reduce further by the FTE reduction rule. And then you're going to reduce further due to not meeting 60% payroll cost rule. Again, I don't think that's going to apply to anybody here. That's going to equal your initial forgiveness amount. Then, for those of you that mark that you got an EIDL advance or an EIDL grant, if you received one of those, that is further going to reduce your forgiveness amount dollar for dollar. So a simple example, you received a $100,000 PPP loan, you spent $100,000 on eligible expenses, you have no reductions on that bullet 1, 2, and 3. Your initial forgiveness is $100,000, but you got a $10,000 EIDL grant. You're going to reduce your forgiveness by $10,000, so $90,000 will be forgiven. You already got $10,000 free, so in total, you received $110,000 total, with $100,000 being free money. You will have to pay back the $10,000. That's how that is working out. I wanted to put this before digging into the reduction rules, just to give you a big picture of what it looks like. And I am going to be checking my watch every once in a while to make sure I'm staying on time. So what are these reduction rules? Okay, and let me back up one slide real quick. It is important that you apply these reductions in this order. It is more favorable in this order, and that is how the forms read, so that's how it needs to be done. If you apply the FTE reduction first, it will penalize you more than if you apply it secondly, okay? So the first one is, so in broad view, you can have a reduction due to not maintaining employee salaries. If you reduce your employee salary or wages more than 25%, you're going to take a haircut, dollar for dollar. Now, if you reduce it 25%, you're good. Once you start going more than 25%, it's dollar for dollar reduction on your forgiveness. If that employee was a high earner, over $100,000, every dollar you reduce up to $100,000 doesn't even count. So your 25% counts once you get to $100,000. $100,000 to $75,000, you're still within the regs. Then if you reduce from $75,000 to $74,000, you're going to lose $1,000 worth of forgiveness, okay? That's your first big haircut. One of the questions that's going to come up, employee wages. If you look real closely in parentheses there, I say average wage rate. It's a mouthful. It is their hourly rate. If you cut their hours because you don't have the business, you know, let's say your PAS and your service hours are down, therefore your employee payroll hours are down, but you didn't cut their $9 an hour, no haircut under the wage reduction. Okay, it only counts if you reduce their actual salary amount or their actual rate of pay. Okay, now next bullet point, and the reason why they gave you that leniency there on those hourly employees is because on the FTE calculation, FTE basically is counting how many full-time equivalents do you have, and payroll hours is the primary driver of that. So if your payroll hours are down, your FTE count is down. And so you're already going to take a reduction there. They're not going to hit you twice by also reducing it on their total wages went down because their hours went down. Now, there are some exceptions to these rules, and I want to go over them after I get through these 4 points right here. So don't get too excited, because I think everybody's, for the most part, going to be clear. There is also a reduction due to payroll costs not meeting at least 60% of your total spend. Again, I don't think that's going to impact anybody here, and you do have to reduce it by the EIDL grant. So back to these reductions, I haven't run across anybody yet that has reduced wages or salaries, okay? If you did more than 25%, you've got to restore it back before the end of your spending period, okay? There gets into some technicalities and I can't get that detailed, but on the FTE count, I know everybody's screaming, well, what if somebody quit, and what if I had to fire somebody for cause, and what if somebody quit and I can't replace them? Here's all the exceptions to the rule. It states if you had furloughed or laid off and you have since reoffered their position, same rate, same hours, and they refuse to take it because they refuse to take it, period. It doesn't matter why, but they refuse to take the reemployment, document it, make sure it's in writing, that's an exception. You're not going to be penalized. Especially true when they're taking unemployment. If they're taking unemployment, you have 30 days to notify the unemployment workforce commission, whoever you work with, whatever state you're in, that you have offered that employee's job back and they declined it. The states are trying to get those employees off of unemployment if they have a job to go back to. If you had to fire them for reason, justifies cause, no penalty. If you cannot find qualified candidates to fill the position, no penalty, no reduction. And then this is kind of a blanket. If you have not been able to restore their hours back to their normal workload due to COVID restrictions. So you're not allowed back in the providers are not allowed back into the patient's home. Hospice, you're not allowed into the nursing home. Whatever reason why you're still down in business because of COVID, then that to me is almost a blanket exception to this rule. So I feel like for the most part, unless there are extreme circumstances where you furloughed a lot of people, and that's really what they're trying to get at here. Did you really just go lay a bunch of people off like a restaurant would have had to do? Or is it down because business is down because COVID is a real thing? So if you can meet one of those exceptions, then those reductions don't apply to you. I think it's a very real possibility that most of you should be able to get 100% forgiveness, which is very good news. Excuse me. I'm really bad about, I'm not good at reading slides and just, reading what you could read on your own. So I already went over this. Forgiveness application goes to the bank. My experience is they're not currently taking them right now. They are looking. So let me give you a little data on this $150,000 automatic forgiveness. When you look at the data, 80% of the loans given out, number of loans given out, 80% of them are 150,000 or less. However, that only accounts for 26% of the total dollars loaned out. So they're looking at it and they're saying one bank, and this has been a while, one bank calculated how many man hours it would take to process a forgiveness application for every loan that they issued. They would have to hire like 30 people into a small bank to do this for like 8 months. I mean, it was some crazy number of man hours, right? So what they're saying is, let us blanketly forgive all the small loans so that we can really focus on the medium and large loans. I didn't put it on here, but any loan in excess of 2 million or higher will automatically be audited. So you need to really, really cover yourself on that. Listen to what Richard has to say about the legalities of those things. And there is more talks. And this second to last point, the Senate passed a bill to extend the loan application date 5 more weeks. So the PPP loan application date had expired on 6/30. And yesterday, the the House actually passed it also. So it's been passed unanimously by the House and the Senate, and Trump could be signing it as we speak. So it looks like that's going to stay open until August 8th. So if anybody did not get a loan, but they want to, that is still an open option for you to go seek a loan for the PPP. And then there are additional talks about, so there's 129 billion still left in PPP money that didn't get spent after that second tranche of money that they put out there. So they're talking about taking it and utilizing it in another package. All right, so that's our PPP cover. So then we're going to jump on to the HHS provider relief funds. And I'm really sorry, the way it hits your bank, it says HHS stimulus, and so that's what we've been calling it. So I kind of flip back and forth amongst both titles. But this is that provider relief fund. This is confusing at best, and I've tried really hard to follow and regurgitate it the same way that HHS is putting it out on their website. If you Google, and I haven't even bookmarked the website because it's so easy to find. If you put in provider relief funds or even HHS provider relief fund, you will get the provider relief fund webpage. It has a lot of information on it. And under the general link over on the left, if you scroll down, it gives you a timeline. And to me, that was the most informative, because there have been all these distributions going on, which have been very, very confusing. So I'm going to try right here to try to clarify that for everybody, so you kind of know where we're at with this and what these different, everybody talking about these different distributions is. So these are grant monies. They were provided through the CARES Act, and I'll be super honest. When the CARES Act came out, before it was passed, me and some CPA buddies kind of jumped on it saying, oh, wow, because the PPP loan, right? We're like, this is kind of unreal, unheard of, at least in my career. And so we start digging into it. The CARES Act, if I recall, was 880 pages. Well, the PPP loan was the first 100 pages of it, and that's it. And we got so dug into that, we didn't even see this part of the act. And so when this money started hitting providers' bank accounts on April 10th, because I will not forget that day, Medicare providers started getting these deposits, and they're like, I'm getting blown up literally in the middle of a meeting with all my CPA buddies. We were on Zoom. I said, guys, I gotta go. People are getting like hundreds of thousands of dollars deposited into their bank accounts. We don't know what it is. So we went and reviewed. What it was on April 10th, on the 10th and the 17th of April, the general distribution started, and that went to Medicare providers that had billed fee-for-service in 2019. 30 billion went out in the first round. Then on the 24th, they did a second round, which was 20 billion. And that wasn't all spent, and not everybody got a piece of the second round. And in the second round, they changed the formula. That there was a formula used in the first round, and it was based on just Medicare revenue. Then in the second round, they said, you know what, we're going to tweak this. We want it to be based on net patient revenues, so all payer sources. Well, a lot of people did not get money in that second round of the general distribution. But when they went and calculated it, they said, oh, based on the second formula, I would have been overpaid based on what I got the first time around. Crap, are they going to recoup this from me? The answer is no, they are not going to recoup it, but you don't qualify for any more. If you were a low Medicare utilization person or provider, and you had a lot of non-Medicare, you probably could have then gone in that second round. If you didn't automatically get it, you could go apply for or request a distribution out of the second round of the general distribution, okay? Lots of questions were going around about that. So that was the first of what that went on in April. Well, then they came out with what they were calling targeted distributions. They did rural providers, they did high impact providers, and the dollar figure there, that's how much they did to each. They did skilled nurse facilities, and then they did tribal units. So then that went on. Well, now, and many of you know, the Medicaid only provider had really been left out, and we kept saying it's coming, we hear it's coming. Well, then finally, only recently did they open it up, and they're calling it the Medicaid, CHIP, and Safety Net Hospital distribution. And so they've got 15 billion going to Medicaid and CHIP, and 10 billion going to Safety Net hospitals. So this is the distribution that on this one, you formally have to go apply for it. If you qualified for a distribution in the general distribution, if you qualified and you rejected it, or if you got it, you do not qualify for one under this Medicaid distribution. So it's only if you've got nothing, then you go complete the application and you apply for money. So that is super confusing, but that is kind of how it's all being digested. So the Medicaid CHIP distribution is now open. You've got until July 20th to apply for it. And you apply for it through the Provider Relief Fund portal. And there's a link to it, which I actually even double checked this morning. I was like, is that right with the little hashtag? It is. It just launched on again, June 10th. Feels like it was 3 days ago, and we're already at July 2nd. Praise the Lord for 4th of July weekend. I need one. I'm ready. And then again, the deadline is July 20th. So what is it? Again, it's grant money, but you got to be careful because you've got to sign these terms and conditions. So you need to understand what is it going to be used for. And this fund is different. PPP is very well defined at this point. HHS is defined, but you've got some leeway. And so in the terms and conditions, it states the money has to be used to prevent, prepare for, or respond to coronavirus and shall reimburse the recipient only for healthcare related expenses or lost revenues that are attributed to coronavirus. That is all very, very important. That's not all the guidance we've been given, but it's the bulk of it. And it requires reporting if in this stimulus payment you receive more than 150 total, then you have to do some kind of reporting. It said quarterly reporting. That has since been kind of retracted a little bit. This 150,000 number does not include PPP loans and Untitled program loans. Sorry. So what are expenses? What are allowed? This is what we're getting the most of. How can I spend this money? Any expense you can directly relate to, and it was incurred because of coronavirus, can be an expense. My approach is go conservative on the expense side. Well, you got to go conservative on the whole thing. Don't misunderstand me. This money is meant to be kind of a long-term play, if you will. So PPP, you had a defined time that you had to spend that money in. HHS money, it is designed to be there until it's spent. It's there to be a cushion for you. It should be set aside in a separate bank account and should only be used to reimburse you for those expenses that are directly related to COVID or lost revenue. It's there to replace lost revenue. So how do you prove these and how do you document these? On the expense side, you know, what I keep going back to is we're super paperless here at our office, but remember back in the day that you had the stamp that said posted? I can just visualize having a COVID stamp. COVID, you know, you get all your invoices in from McKesson and whoever, and oh, that's a COVID expense, that's a COVID expense. That's how I'm visualizing this. All of your direct PPE, all of your direct, if you had to, you know, pay more money for telehealth, if you had to, you know, if you had to buy Zoom or go to meeting or whatever to collaborate with your team, anything that it doesn't have to be a direct care expense. Well, it gets a little foggy there, but you want to be able to just document, I had to do this to continue to deliver patient care. And I had to do it because of COVID. If COVID never came, we never would have done that. Then that is what that money's for, to replace lost income. That one's going to be a little bit easier to trace, I think, because you can trace missed visits, discharges because of COVID, and we'll get to some of that in a minute. But how do you document these? Kind of getting out of order here. What are these reporting requirements? The original reporting requirement said it was going to be due July 10th for the quarter ended June 30th. On a recent FAQ that they put out on June 16th, they said that's been canceled. And it was a little bit weird because basically what they were saying, well, to meet the CARES Act reporting requirement, they are, just so everybody knows, reporting every recipient. They're reporting your agency name and how much you received, and it is public website. But that's the reporting that they said was due in the CARES Act, and that HHS will want further reporting justifying your use of the money, and they'll let us know when and where to provide that. So it said in the coming weeks. So we have not seen anything more on that. So the best we can do is just document, document, document. Even if you need to document a conversation between yourself and the board, yourself and your advisory committee, yourself and your management that said, hey, we discussed incurring this expense, it would help us because of COVID, blah, blah, blah. Document everything, put it in a file. Like I said, it is ideal to have a separate bank account because you need to show that that money has not been spent until you justify spending it. So it sits over another bank account until you've spent the money, justified it was a qualified expense, and then basically ask for reimbursement out of that account. That's how conservative we're being. Those of you that know me know I don't tend to walk a super conservative line. On this, we're being overly conservative because we just don't know yet. We also record these expenses in a separate ledger, not ledger, a separate GL account. So if you're in QuickBooks, a separate class, or maybe you set up a whole separate section of your P&L that's just COVID expenses. And then you do want to save all of your invoices, all of your receipts, and everything that you can to document the expenses. Again, I kind of got out of order. This is what it says. This was in an FAQ, and you can find these on that website. There are tons of FAQs. But any supplies used, any equipment used, workforce training, development and staffing for operations centers, any testing that you've got to do, building a temporary structure to expand your capacity. I do have a client, for instance, that is a hospice, and she had office space, and then she owned the rest of the space but used it for storage, and it was like a warehouse. She built that out another 1,000 square feet so that she could spread out her administrative staff and spread out her nurse stations, so she had more space. So that was a COVID expense. Acquiring resources to preserve and expand delivery care. That is a little bit open-ended, in my opinion. And so document. But that's why I said it doesn't have to be a direct care expense, because they put this in here. So it's a little open-ended, but just document. Now, it doesn't say it in this terms. It does not say expenses must be incurred on or after 1/1/2020. It says it would be very hard to prove that anything prior to that date was COVID related. I happen to know there's a big suspicion in Oklahoma that COVID broke out in December up there. I think my sister and her whole family got it. Anyways, eligible expenses. Again, this is kind of more of an example. All of your hand sanitizers, PPE is the easiest one. These are the easy ones, that top bullet. But also any overtime wages that you had to pay for staff covering people that were out because of COVID quarantines. That might happen. Or let's say you have a salaried nurse out on quarantine and you had to pay a PRN. And that's an additional expense. Additional professional fees. So like additional fees for somebody like me to do all the extra accounting or the consulting and helping you, work out your PPP forgiveness. Well, not PPP, I'm sorry, but all the COVID consulting piece of it for HHS money, HR issues that come up, if you've got to have, support in that area. Hardware cost, we got all this work from home. I had to buy a couple more monitors. My team was pretty well set, but we had some luxuries in the office that they didn't have at home, and it was cheaper to just buy new ones for home. And so they've done that, and that's why my dogs were barking earlier, because somebody came to pick something up. We've got half in the office and half at home. Additional software for telehealth expenses or work at home capabilities. Those are good examples. Now, lost revenue. Lost revenue could be documented depending on your billing system. Maybe you just keep a spreadsheet. That's what a lot of people are doing. Fewer patient visits. That's lost COVID revenue. That's lost revenue due to COVID. Canceled elective procedures. I have one client who does a lot of therapy. He's fully staffed with salaried therapists, PTs, OTs. They do a lot of hip replacements, knee replacement, kind of orthopedic rehab. They were hit really hard. And so for them, their referrals are down. And they know they get 10 referrals a month from Dr. X, and Dr. X is closed down. So they've documented that and assigned this was a home health, so it was some kind of HHRG to that patient, and they just quantify what that was in lost revenue. Lost referrals, same thing. Non-admits or not taken under care. Thank you, healthcare consulting, because that was the term I could not remember. They edited my slides for me. What a value that is. My husband laughed when I told him that at home last night. Increased uncompensated care. These are all lost revenues. What you want to do is maybe at the end of the month, maybe it's at the end of the week, but I think, the end of the month, you can quantify all of this, come up with your number. Okay, for June, we had $45,000 worth of lost revenue. I'm going to withdraw that from my HHS provider relief fund that's sitting in another bank account. I'm going to recognize that as income now. And it is truly recognized as income. Now, when you have lost revenue, you're not restricted per se as to what you can use those funds for. So it gets kind of confusing. So in your documentation file, you're going to document expenses that were directly COVID and lost revenue. Now, when you withdraw the lost revenue fund and put it in your general fund, from there you can spend it, I kind of want to say like normal, for normal operating cost, okay? And I think the next slide we have more examples of what that might look like. So that, in that case, then you can pay for any employee payroll, right? If you can't make payroll because you lost revenue and you withdraw from your provider relief fund to cover payroll, that's allowed. Employee health insurance, mortgage, rent. So like rent is not a COVID related expense, but you're using the lost revenue piece of it to pay the rent. That's allowed, okay? And this is where your EMR, your billing software, licensing fees could be covered under those funds. So again, like I said, they don't have a spend by date. They're here to be used over a long period of time. And if at the end of the pandemic, if there is an end, if there's anything left over, at this time, HHS has not given any inclination that they're putting any kind of horizon on this or sunset on it. But if there's anything left when they do say, okay, we're done with this, then you will be required to give it back. So you do want to try to use this up, right? Or if you don't want to and you want to give it back, by all means, that's an option as well. There have been no directions on how to return money, but we do know they said you can return money. So if they do find any to have been used inappropriately, they can recoup those from you. And it cannot be used for the same purpose as what you used your PPP loan proceeds for. And then HHS, of course, always has the rights to audit whatever they handed out. So real quick, and again, I've got another separate webinar just on HHS funds, and that one is next Wednesday. We haven't held it yet. I've held one, but we are doing an update. Again, we highly recommend a separate bank account. This is how you're going to account for these funds, right? When we also recommend you set up separate GL accounts. So your chart of accounts, you have separate coding, or like if you use QuickBooks, internally we're doing it as a separate class, okay? And you're coding those specifically. So in the general ledger, when the time comes, you can print a report that matches up with what you withdrew out of the account for the expense side. There's no real accounting of the lost revenue. We're not, saying, hey, we would have had this much more Medicare revenue. Here's what we're doing. When the deposit comes in, it's going in to the books as unearned revenue. When it is justified and withdrawn from that other cash account, we're then reclassing that amount from unearned revenue to earned revenue. And then this will be classified and categorized and included as taxable revenue on the year in which, it depends on how you're taxed, but most likely on the year in which you receive or you take that distribution of money. When you recognize it as revenue, that's probably when it's going to be taxed. That was the provider relief funds. On the PPP funds, how do you account for those? Again, most people have done a separate bank account, and then they've been using it as a reimbursement with every payroll run. They calculate what's reimbursable because payroll taxes are not allowed in your PPP funds. You cannot draft your entire payroll out of your PPP funds. If you did that, you need to correct it, and you need to write a memo that you made a mistake you did not understand, and you need to put that with your documentation. So you really need to be running payroll, calculating the allowable amount, and which reimbursing your general fund from the PPP funds. Then for the expenses, there's no need to segregate those. Those are for the most part wages, and they need to be reported with regular wages and don't need to be segregated out anywhere, because at year end you got to tie all your tax return should tie your wages reported on the financial statement should tie to your payroll tax returns. We're really big on tying that all out at year end. Again, when you receive this deposit, it comes in as a loan payable because that's what it is. When it is utilize, no, not when it's utilized, as you're using it and you're transferring from the PPP loan account to your regular operating account, you're just doing a bank transfer. That amount stays on your books as a loan payable until you are granted forgiveness. When the bank comes in and says, all right, you no longer owe us $100,000, you did receive an EIDL loan, so you owe us $10,000. At that point, you will reclassify the forgiven amount from loan payable to other income. And again, that's going to be taxable revenue as it stands today. So I got polling question number 2 to launch. And stop. It's easier to launch the first question. All right, polling question number 2. How was your business affected during the pandemic? So passing on, those are the benefits that we have. How was your business affected? Here's my answers or my options. You know, we got hit really bad, reduction in services at 50% or more. We've taken a hit, but I've heard worse stories. Our reduction's been around 30 to 50%. You know, it's not been too bad for us. Reduction in services around 10 to 30%, or we fared pretty good so far, less than 10% reduction in services. And then some are saying, you know, we've actually grown over time. We've seen an increase in services. So I'm kind of curious just to see how everybody plays out in this. And the majority that I'm seeing is about what I've personally seen from our practice. I'll give everybody a few more seconds. All right, I'm going to go ahead and end this last second or two. Okay, and let me share it with you. So this matches what I've been seeing. Is the middle one not too bad for us, 10 to 30%. That was about 50% of those that answered. That's where they land. And then you can kind of see the spread amongst those others. So we've had about 6% say they're growing. And I do actually have an email in my inbox. And if you're on this call, I have not forgotten it. That's actually looking to expand and to be there to make sure that if some agencies cannot continue, you know, how can they go in and continue servicing those patients? So moving right along. That did not advance my slide. There it goes. Okay, payroll tax deferral. This is fairly simple. Basically, what they're saying is businesses are allowed to defer the employer portion of the Social Security FICA match, which is the 6.2% of your employer payroll tax match. So 6.2% of the wages can be deferred through the end of the year. And so what this means is any wages paid from 3/27 to 12/31 can be deferred, and then the first 50% of it is due by 12/31/2021, so next year December, and then the other 50% is due the following year, year 2022. So you can accumulate and quit paying your Social Security match from now until the end of the year, and then you're going to have a balance. Here's what's due, and you pay half of it by that following December and the other half by the next December. Now, don't ask me how to do this technically. Every payroll system's handling it different. It sounds to me like the payroll providers are basically not withholding it from you. Like if you are one that you impound your taxes, they're just not going to impound it, or they may impound it all and then refund that amount back to you same day kind of thing. And then it's on you to do the accounting. So I don't know what it's going to look like on a Form 941. I don't know. I would get with your payroll provider on that. But that is now available for you. It's another source of immediate cash. You will have to pay it back. And there's no discussion of interest being owed on that. And then there's this EIDL loan. So EIDL is Economic Injury Disaster Loan Program. This is nothing new. PPP is new. This is not new. This is what people get when they get a hurricane hits their house and they go and they get an EIDL loan from SBA to rebuild. So these are SBA loans with very favorable terms, 30-year note, 3.75% interest, up to $2 million per borrower, and there are smaller loan amounts. I want to say it's 200 or 250,000 that don't require any collateral. Larger loans, they're going to collateralize basically anything in your business, such as accounts receivable. And there are some catches to this. People have been getting these loans. The portal was shut down there for a while, but if you applied very early and you got that EIDL grant, that was you saying, hey, I'm interested in an EIDL loan. And so now if you get an email from the SBA, it almost looks a little too good to be true and a little fraudulent. So if you're super sensitive to those, people are saying, hey, is this legit? It is legit. It says to go set up a portal and complete your application. It's fairly simple, but there's a catch with these. There is a clause in this loan document that you sign that says you are not allowed to take distributions of net income until the loan is paid back in full. So pay attention to that. I bet Richard probably has some things to say on the legal side of that. So what should you be doing now? You know, my opinion is with these extra funds that are given to you, I would be very conservative. I would be very, and not only because of the funds being given to you, but because the climate, we don't know what's going to happen. Fall is just around the corner. Winter's right behind it. Is this, I mean, I'm in Texas. We're seeing a resurgence of it right now. Things are shut back down again. We don't know what it's going to look like in 6 months. So that's why I'm saying be conservative in the business as a whole. Don't go buy a new Mercedes right now. Right now is not the time. Although there are very enticing offers going on. Document everything and keep super accurate records. Make sure this one I cannot stress enough. You know, we all get junk emails all the time, but really glance at them and learn the people that are really giving you good info and pay attention to those, because that's the best way we can get that information out to you is via email and then these webinars and different things. But look at what we're trying to put out there to you. We're not always trying to sell you something. A lot of times we are just trying to make sure you're aware of changes and things. And lastly, you know, just don't be afraid to ask for help. So here's my next polling question. It is, do you feel like in the environment that you've had to adapt to very, very quickly, oh, hold on, I didn't launch it, sorry. Okay, do you feel like you've found new effective ways to operate your agency? And I asked this question because one of my monthly clients that we work with a lot, she said to me, she goes, man, we have found so many efficiencies and we just really had no idea how much leaner we could operate. And I found that quite interesting, you know. And so anyways, and so, you know, what's been your experience? Have you been surprised at the efficiencies you've been able to figure out, or are you struggling with it? You know, like for instance, right now I'm trying to hire, and that's hard remotely. Like, how do you get a culture fit when you're meeting somebody on a Zoom meeting, right? It's hard. Or, you know, were you already super lean? So work-wise, we were already set up to work remotely. That was no big deal for us. We just went home for the day. And then I got tired of being home, so I couldn't take it very long. So I had to come back to the office. And I have a long drive, but it's still, I like it at the office better. So we'll give it a couple more seconds on that. All right, let's end that, and I'll share those results. And it's fairly even that, you know, a lot of people, 39% say they're really surprised in what they've been able to accomplish. And then more than not are really struggling still to figure it all out. You know, I will say I really fought the stay-at-home orders with my team. It worked out. There were 6 of us, 3 of us wanted to be in the office. The other 3 wanted to stay home. I really had a problem with it at first. I wanted everybody in the office. There's not that many of us, you know, blah, blah, blah. And I finally just got over it. And it was a mental shift. I just had to say, things are probably never going to be the way they used to be. And I don't like that answer. I don't like it, but it is what it is. And I want to thrive and I want to move forward. And so that's just what I've chosen to do. So anyways, moving on, I think I only have a couple more slides. Where are we at on time? We're pretty good. So just looking forward into this series of like my next couple of sessions, which I forget which session number they are, but they're the one about, you know, I want to know I want to help you get ready for the next event that we have, right? Or the next crisis, or just to be able to adapt to work with a huge, you know, remotely, right? We work with people all over the nation. We don't have to be, I have very few clients in Austin. Like, we want to help agencies get there, right? Maybe you have satellite offices all over the state and you want to come together as a team, but we want to help you prepare for those things and really to build a strong business foundation so that when it gets shaken by a hurricane like this, you're able to withstand it. So session 1 is really going to be talking about getting you prepared. And then my last session will be, how can you thrive beyond this pandemic? I really want to look at some best practices, and I'm going kind of backwards. Look at, have you looked at outsourcing things? What are you doing with technology to let it be your friend and leverage it for your benefit? So I want to, these are the things that are out there for you. What we're seeing in most cases, I don't mean to be nonchalant about it, in most cases, people have more cash right now than they're used to having. What are you doing with that excess cash? Are you saving it to be super conservative? Are you restructuring your debt? Are you paying it down? What can you do with that to help better set you up for what's to come down the road? That's what I want to talk about in our coming sessions. My team, we are here to help. We are working with a lot of people on this. People that were not already clients have been coming to us because we're really dug into this. We're really committed to the industry to help keep everybody up to date on this. I have turned into a marketing and sales person. I didn't know that was my background, but apparently my DISC assessment tells me I'm really good for that. And then I think I'm going to turn it back to Charity for the next discussion.
Yes, so first of all, we want to thank everyone for attending today. As we've mentioned before, Knight CPA Group, Healthcare Consult Link, and DLA Piper are all collaborating on this, and we really appreciate you coming and spending the time with us today. We do want to remind everyone that we do have session 2 scheduled for Thursday of next week. You will receive, anyone on this message, this call, as well as anyone who received the first message, will receive an invitation with a registration link. So be looking for that, and we'll be talking about EPP, infection control, and the quality programs. And if you do have any difficulty with the registration information, or you need some support trying to get, ready to attend the webinar, just call the number that's on the screen, or you can send us an email. That's our Healthcare Consult Link general information email, and we will be able to help you get that so that you will be able to make sure you can get in when the time comes with the appropriate information. So what we're going to do next is we're actually going to shift over and take questions. Now, we've received some questions via the chat as well as through the question and answer part of Zoom. So Amy, if you want, they all look to be focused on the topics that you were talking about. So you let us know how you'd like to proceed as far as just going through them on the screen and then reading the question and naming the answer, or how you'd like to do that, since they do appear to be about the topics that you covered today.
Why don't I just I'll go through the Q&A section first, because then I can mark them as answered, and then we'll go over to the chat. Because I do see a few there. So first question is, can we expend the whole 100% of the loan, and this is the PPP loan, on payroll? Yes, good question, and that is what a lot of people are doing. So you can take your PPP loan and just spend it all on payroll, especially since that window has been opened up now, and I will say that's what a lot of providers are doing. All right. And then next is software eligible? So software is going to be eligible. It depends on what kind of software it is, but under your HHS Provider Relief Fund, if you use lost revenue to pull that money, you can use that to pay your software. If it is a software directly related to COVID, delivering care or something, that would be eligible as an HHS expense. Software is not going to be eligible for anything under PPP. Next, does it mean that? Okay, the time period for PPP is extended to 12/31. Does that mean it is covering payroll expenses for more than 8 weeks, or does an employer get to choose? Okay, again, you've already been granted, so the PPP loan, the loan amount that you got was for 2.5 months worth of payroll. So you took your average 2019 monthly payroll times 2.5, that's what they loaned you. You now have a longer term to spend it. You don't get to spend more. It might take you longer than 8 weeks to spend it. You just have longer to spend that 2.5 months, but they're not going to loan you more. So it's still the regular 2.5 months, which is 10 weeks. So you still got 10 weeks of payroll to be spent over now 24 weeks. So I hope that answers the question. And then is PPP the 60-40% even for loans that originated? Yes. Okay, so if you had an original loan where it said you had to spend 75% on payroll and 25% on other, that is now automatically converted to 60% on payroll, 40% on other expenses. So that's an automatic conversion. I have an employee, RN LVN. I have employees who are RN LVNs who are on 1099 pay. Is their pay not part of my payroll expenditure? It is not, because they are not employees. And I can go down another rabbit hole on that. If you call them employees, if TWC walks in your office, they will hammer you and make them all employees, and you will be penalized. They are either contractors on 1099 or they are employees on payroll. So if they get a 1099, they are not employees, and their pay does not count under PPP loan. So that can't be included at all. Yes, the forgiven portion will be taxable. And bonus to management personnel, assuming compensation is less than 100,000, one-time bonus, is it considered forgivable? Yes. The only limit you have is any one person cannot get more than that 100,000 annualized. And so it depends on how many weeks you go as to how much that number can be. And you're going to want to get real specific with your banker on that, because they're the ones that's going to allow that. Only idle advance reduces your forgiveness, not the idle loan. Correct. Only that advance grant portion affects the PPP loan, not if you got a full idle loan. That doesn't affect it at all. Provider relief fund dollars used for lost revenue. If we took a PPP loan and used it for payroll expenses, does this conflict with double dip? So yeah, you're going to need to be careful here. Because provider relief fund cannot be used for the same expenses as PPP. If you're going to use provider relief fund lost revenue to then cover payroll, it needs to be after you have expended your full PPP loan. And so you're going to have to get real specific on your dates. All right, payroll from 4/1 to 6/30 was all covered by PPP. Now I've taken a distribution from my provider relief fund for lost revenue. It's going to cover my July payroll. So you got to be very clear. And thank you for bringing that up, because I did mean to include that and I forgot to. Let's see, under PPP loan forgiveness, could increase PPE? No. Again, I'm going back to, if it's not rent, utilities, and utilities as defined, it does not qualify under the PPP loan. Nothing else qualifies under the PPP loan. And I don't think it's going to be revised, because you've got provider relief funds to pay those if you applied for those. I received 2 payments from the HHS funds. Am I still available to apply for more money now? No, you are not. You've been granted what you're allowed. Can I use the HHS funds to pay for employees who are sick due to COVID? Is there a maximum amount of hours I can pay using this? I did not cover this topic, but if you have employees sick due to COVID, you are able to pay them 2 weeks pay and get reimbursed by the government outside of PPP, outside of provider relief funds, through a payroll tax credit on that exact same payroll. That is under the Family First Coronavirus Response Act, the very first package of legislation that came out. Talk to your payroll provider about that. There is it's called Emergency Sick Paid Act, ESPA. So check with them on that, because you can use other dollars to pay for that. I would say once that's expended, if somebody's already taken 2 weeks of that and they're still out sick and you're paying them, I would think that would qualify under your HHS provider relief funds. I don't know, that one might be tricky. I just want to clarify that reporting requirements for HHS distribution is 100,000. No, it's 150,000. If you received more than 150,000 in HHS distribution, you will be required to do reporting. Less than 150,000, you won't have to report. Can the PPP be used for 10, 12, 16 weeks? Yes, I'm glad you brought up that question. You don't have to pick 8 weeks or 24 weeks. Basically what you're going to do is pick 24 weeks. I say pick, there is nowhere to pick it. Everybody we've got is on an 8-week plan. They're just extending it to 24 weeks. But many of them are being spent out in week 12 or week 10. Then you're just done. And then whenever the banks start accepting applications, you can file your application for forgiveness. Will the PPP loan pay the employee's part of taxes? Yes, because the PPP loan pays gross payroll. Gross payroll includes the employee's portion of taxes. You need to really make sure you understand payroll before you do that. That's why there are professionals out there to help you with that. Through the HHS funds, am I able to give a bonus? Is there a max amount? There is not a max amount. Again, this is where I say err on the side of caution, because this will be reviewed. You will have to report it depending on how much you got. There is a little planning opportunity here though. If you got PPP money and you got HHS funds, I would use PPP money for regular payroll. I would pay a COVID bonus out of HHS money, because there is nothing that says you can't pay a bonus for like going the extra mile, making extra visits, working when nobody else would, taking the on-call shift, those things, right? And not only that, but working when no one else will, like being the one to be brave to put on the PPE and go out there and see these patients and make sure people are taken care of, right? Those are frontline workers. I think they all deserve a bonus. So there is some strategy there. I would pay bonuses out of those funds. It'll extend your money and spread your money further. Can you open a separate account now if you have not done so? On HHS, I would highly recommend that. And then I would even go back, I would put the full amount there and then go back and document, all right, here are my expenses so far, take a withdrawal. Here's my lost revenue so far, take a withdrawal. That's what I would recommend that. On PPP loan, if you're 10 weeks into it, if you're 8 weeks into it, I wouldn't. I think it'd be a waste of time at this point. But on the HHS provider, I really would. What's going to be nice on the provider relief fund when you do this reporting, if you've got a separate bank account, how easy is it to give them your bank statements? Here's my withdrawals. And for each withdrawal, here's my documentation of why I was making that withdrawal. It's super clean. Trust me, from an auditor perspective, my job when I was very young in my career back in Oklahoma my job was to take the records and put them together so the Medicare auditor coming in would understand it and take what we were, how do I say it, PC, take what we were feeding them, right? The better you can create your story and make it really, really clean and not leave anything to judgment, the less decisions they have to make or the less thinking they have to do about it, the better off your case is. Remember, this is going to bankers. Bankers don't know accounting. I mean, they kind of do, but the better you document it and make it super clean, the less they have to think about it, then great. Think of an ADR. When you put that documentation together and you know you're giving it to a clerk at Palmetto, and you're like, I know they're not a nurse, and whoever's reviewing it, the better you have that, the better chance it is of just passing, right? That's what you want to think about there. So that's why we recommend a separate bank account. Where do I apply for the Provider Relief Fund? Again, Google, it's in the slides. There is that link, takes you to that Provider Relief Fund portal. But if you Google Provider Relief Fund, HHS, it will populate. You're looking for an HHS website and you can navigate. It says for providers and you're looking for the link that says Medicaid CHIP distribution. That's the section you're looking for because there's a lot on there. Okay, I got a lot more questions popping in. Does SBA require home health agency to show lost revenue in order to qualify for forgiveness? No, they do not. That is not a requirement whatsoever. Good question though, great question. If I work from my house now because of COVID, can I use the loan to pay my rent and bills? No, I think they would expect that money back. I'm going to say that's being too aggressive. If I receive 2 payments from the HHS fund, is there anywhere else I can receive money from? Not from HHS. You might consider deferring your payroll taxes. Again, you got to pay it back. And you might consider an EIDL loan, but again, you're going to have to pay that back too, but it's over 30 years. Those are the only other resources I can think that would be open to you. That's everything in the Q&A panel. We are right on time, but let me, oh, there are more popping in. Let me, I'll stay on as long as you guys want, because after this, I'm doing a Peloton ride, and then I'm going home, and I'm having 4th of July weekend. I happen to live on the lake, and I'm a lake rat. Can I use the HHS funds to pay employees who are sick due to COVID? I think I might have answered, I think she might have put that over in the other one. I feel like I answered that. Great meeting, great webinar. It will be on YouTube and on the website. Payroll tax credit only for providers of 500 employees or less. That is a great question. I do not think that is the case. If you will email me directly, it's amy@knightcpagroup.com. It's also the email that the registration, no, it won't come to me. You'll have to email me directly. If you email me that, I'll look that up. I don't think that is a small business only benefit. I might be wrong. I don't know that question. So then I use QuickBooks for summary report. Is that sufficient for payroll forgiveness? Yes, your payroll summary out of QuickBooks, that'll be just fine if that's where you run payroll. Now, if you don't run payroll in QuickBooks, you want to report out of wherever you run payroll. But I think you're saying you run it out of QuickBooks because they call it a payroll summary. That'll be just fine. For the EIDL loan, does that mean we cannot take our owner's draw until the loan is paid back? Yes. Yes. Now, there are some, it says, so it depends on how you're structured. If you're an S Corp or a corporation, you're supposed to be taking your pay via salaries, right? You're an employee and you take your W-2. If that's the case, then you can't take any distributions. If you're an LLC, a partnership, or a sole proprietor, then you're taxed as a partnership, and there you're probably, you might be on as a W-2 employee, depending on if you follow my advice or not. You can take W-2 wages. If you take no W-2 wages, I think it said you're allowed to take reasonable compensation as a distribution because that's how you've been paying yourself. And they said, I recall seeing like 40% of total net income could then be paid out as reasonable compensation. So there's going to be a little bit of leeway on that. We really don't have any guidance on it. You know, what is going to be their monitoring of this? Who knows? I just wanted to make sure everybody did see that clause on there. That's all I got. I appreciate you guys. We all appreciate you. We have been working a long time on this. We're excited to finally get it out to you. And, you know, every Thursday at lunch is when we're going to do this. And I know that for my sessions, I'm happy to stay on as long as people keep asking questions. And I think the other team is as well. So we'll just stay on and answer questions as long as needed, because I know I blew by a lot of that. But I wanted to give you a big overview of it all. So we all thank you guys. Anybody got anything, last words to say?
Amy, the only thing that I would like to add is that we will be sending out a copy of the presentation to everyone so that you will have it. And we also, like I said, there was a slight delay in getting the series webpage up and going, but we should be able to get that up hopefully by the end of the day Monday. And we will be posting the recordings as well as a copy of the materials to that, so that if you weren't able to attend or you want to share it with someone, feel free to share it, because we are not charging for these. We do want to make sure we reach as many people as possible who can benefit from it. So we will be sending that information out to everyone who was on the original mailing list as well.
Yeah. All right, guys, I'm going to log off and let that recording start downloading. And everybody, yes? Do you have something else?
There is actually one last question that has popped in on the Q&A. How do I apply for a Medicaid distribution? Could you answer that real fast before we wrap up?
Sure. It is when you get the slide deck, one of the slides has a link in there, but it's on the Provider Relief Fund website. So what I've been doing is just Google HHS Provider Relief Fund, and it comes right up. It is a CMS, or not CMS, it's an HHS website. There's a link on the left that says for providers. And so click on providers, and then it's a little bit down, but you're looking for the Medicaid CHIP distribution portal. So it's the one that says Medicaid, and it's actually a couple of links, because one is a link to the portal, which is the link that I put in the slides. There's also a link to, there's actually an application, and then there's a link to the instructions to the application. So there's 3 little hyperlinks in there. That's where you're going to find where to apply for those Medicaid distributions. So, all right. Okay. Logging off, you guys. Everybody have a great day and a great weekend. Thank you.
Thank you, everyone.
Thanks.